In this video, I will try just to be short and to explain the safe money. Safe money, it means people who are getting money from the stock market, but safely, without having to risk their money. So what they do, you, for example, if you want money, you do a job like stock analyst. Stock analyst, it means a person who follows a company, and he give recommendations on when to sell and when to buy. Okay, so he tries to give advice to people on how to sell and to buy. Now, these analysts are paid too much money to influence you, who are the trader or investor. You go, for example, to CNN or you go to other CNBC where we have a lot of, speaking about money, you find analysts, you say, okay, this company is doing good, fundamentals is good, and it's getting a lot of business, a lot of earnings. Now, they try to influence you. Now, why these analysts do that? It means, why do they ask you to sell or to buy something? It's because they are paid by the company. Paid by the company itself. Or they are paid by someone else. Okay? They pay them in order to tell what they tell. Okay, try to think about it and try to be logical. Who knows the future? No one knows the future. Okay? So why you listen to these guys? Okay? Why do you listen to them when they say they know better? If they don't know better, if they know better than you, they should invest in the company. They ask them, anyone who buys, they say, okay, can you show us that you buy from this company, and I will buy with you. Okay? I will buy when you buy. But these people, they give just advice, or like this guy who is Jim Cramer that I speak before, Jim Cramer, they give you advice. Oh, say, okay, the market is good today, buy. Okay, and have you bought stocks today? No, they will not buy. So they are getting money, a lot of money, as safe money. Although they are in the stock market, but they don't invest or trade. Okay? Analysts, they do not trade or invest. If they want to invest or trade, it should be a sure thing. Someone tells them, like a mutual fund, like this analyst, he has a mutual friend, and he tells him, oh, okay, I am buying that stock. Okay, buy it. But this analyst, he will never tell you to buy that stock because it's insider information. It will never happen. That's why these analysts have what we call safe money. Now, if you want to save money, you should work like a journalist, analyst, a journalist. You speak about the stock market, okay, you speak, and you are getting too much money, you are getting money for free, okay, for a safe money. But you are not in the market, because the market or the stock market, okay, stock market is risky. Anyone who tells you the stock market is not risky, he is lying. Except when you buy something with interest, like for example bonds. Okay, they give you like 5% each year, for example, 5%. Here you are doing safe money too. So you are just, buy something, holding the money for some years, and then you get your money, okay? So you don't care about the stock market, what's going on. You get the 5% each year. Now, I will tell you something which is, why do you think the stock brokerage firms, why these stock brokerage firms give you a loan, or what you call margin account to trade. Why they don't trade themselves? Since they know the market, it's very good, they know the market, but why do they don't trade themselves, but they let you trade? For example, right now, I think it's, depending on the brokerage firm, for example, 4%. Why they want to give you money, a loan, or to borrow you, to give you money for 4% each month, then to trade, okay? Because the stock brokerage firms, they know trading is risky. That's why they don't risk their money. Their money, they want an interest rate. And who will have a risk is the trader or the investor. Trader or the investor. He can win money and he can lose money. But for them, they will not lose money. The only thing they are sure about is to get this 4% from your money, that it is in the margin account. Okay? So this is something about the safe money. Or if you want to save money, go and be a mutual fund manager. Okay? A lot of people, they go to school, they get degrees, and they become mutual fund manager. So this guy, he is doing safe money. He is getting a lot of money from safe, because the mutual fund, they get money, percentage like 2% of the whole money for themselves. Okay? So if you have any question about this safe money,